Hi, Ashwin.
How are you?
It's been since March of this year where we've been faced with a market correction because of the fear of steep interest rate hikes. And historically, a market correction would last approximately 6 months. So at worst case scenario, we would have another 4 months to go. So I'm a little bit jittery and I've written down some points and I would like your expert professional opinion about whether I've got it quite right. So please indulge me. To snap out of this snap out of this fear scenario, it would be great. And I know Biden is already speaking of removing Trump tariffs on Chinese goods in his bid to lower inflation. That's one. The second one is China is lifting COVID curbs and the supply chain should normalize, hopefully sooner rather than later. And once inflation drops, the Fed will no longer be as aggressive in raising interest rates. So that's one. And I know that in November of last year, you already foresaw this correction because you predicted it. And your advice was to stick to quality names, quality companies, not to panic, buy the dollar, to hedge against equities. What say you? Can you please, give us some direction?
As you said, Tessie, in November last year, we did foresee this correction. It is inevitable because the interest rate hike will be an excuse to cause the market to drop. Now, of course, all of you will say, but the market has dropped so much, it has erased all the gains of this year. But when you come to that, let me remind you, you are looking at all the gains being erased this year. But if you look at the 5-year chart of a company, it shows just a correction. Okay, that's the difference, which I'll come to this later. So let me elaborate. Firstly, this market is blowing its top because it's afraid of 50 to 100, in fact, 100 points and above interest rate hikes, and
Yes.
also the fear of a recession. Well, you heard it from the horse's mouth. I'm putting my money where my mouth is. There will be no recession. But even if there's a recession, it will be short-lived. We are not talking about subprime housing crisis here. It's a different scenario. Secondly, I'll repeat, do not focus on day-to-day stock price movements. And my reiteration was made by Warren Buffett to CNBC, who said the same thing. Do not look at stock price every day. Why? If you're buying a strong company with strong cash flows, low debt, and great businesses and services, what is there to panic? I'll give you a free tip again. Microsoft. Look at the 5-year chart and you will see Microsoft is just merely trading and staging a correction. And
so you're saying it's not a crash, it's a correction.
Yes.
And furthermore, there will be no recession. And even if there were, it's going to be very, very short-lived.
Yes.
So putting yourself in my shoes as a retail investor with all my friends and network, trying to do our best in this rather crazy scenario, what is your advice? To pull the camera back and think about things longer term? Yes, but in the meanwhile, our portfolio is underwater. What should the mindset be?
Portfolio is underwater. For those who have enough margin, you should be buying the US dollars whenever the market drops to make short-term profits. But I say this only for those who have enough margin, because for those who have less than 100,000, we cannot help you because a hedge costs money. To buy the US dollars costs money. You see, this is the way trading is done. Okay, you buy a top-class company. If the top-class company stock drops, okay, you buy the US dollar short-term and you will balance out your paper loss because that dollar position will make money for you. Free tip for everyone watching this video. I say it again. Okay, Microsoft is close to 30% undervalued. Look at the 5-year chart. You'll see Microsoft is merely staging a correction. So you see, whenever we have a new client that comes and we tell the client 100,000 minimum, okay, and he'll say, why do you want so much money? Now, this is a good lesson, I would say, to all potential clients. When you say, why do you want so much money? It's not about us. When the market stages a correction and volatility like this, you have to have enough money. There's no such thing as, why are you asking me so much money? And I can tell you, a lot of people in the banks who buy penny stocks would have been killed with call margins. Because this is where the education of the investor must take place. Investors always think that we ask for hefty margins because we're making money for ourselves. No, we ask for hefty margins so that when a correction of this nature takes place, you have enough capital to cushion yourself. And you have enough capital to turn around, okay, and make money short term from the US dollar. Because the US dollar,
if those of us have bought good names, we just hang tight.
Yes, and like I said, the US dollar always goes up when the stock market drops. Remember this. So if you are feeling panicky, go and buy the US dollar and the stock market drop, and you will make money on your long dollar position.
Right.
There's nothing to panic about, Tessie. This whole game, investment game, is about two things. How long can you wait? And how much money do you have? Very simple. We are very mature people. We have people who say, why wait so long? Why wait 6 months? Because, like you said, a correction can last 6 months. Now it's been 2 months. We cannot control the correction. We can't tell the correction to last another 1 month. If you have to wait 4 months, you have to wait 4 months. So, you know, we get very, we don't know what to say when clients say,
this is the Fed. This is the Fed trying to cure inflation.
Yes,
so it has to be done.
I want to remind investors that market volatility and timing, no one can control. No bank, no investment advisor, no algorithm, nothing.
So that's where the strategy becomes.
Timing is not in our hands.
So that's where the strategy becomes very important. It's imperative.
That is why most banks, when you ask them, how long must I wait to be on the safe side, they say 6 months to 1 year. This is why. This is why. Because they cannot predict how long a correction will last. And they cannot control once a correction kicks in to how long it will last.
Sure.
No correction has lasted more than 6 months.
Right, right.
Or 4 months now. 4 months now. But even if the correction lasts 7 months, we can't control it. And that is the fact.
In November, you already told us to stick to quality companies. Yes. Do not panic. Take a longer term view.
Yes.
Buy the dollar as a hedge. You already said these things and you're saying them again, yes?
Yes. Now, if you look at the chart on the left-hand side of the chart, the background you have on the video, in my background, you can see on the left-hand side, you can see that line is coming down sharply. That is the average 5-year PE ratio that is approaching the 5-year low. Quality companies, the PE ratios are approaching 5-year lows. Don't you think that is a buying opportunity for people who have money and for people who can wait?
Yes.
That is what we have been calling this in the last 2 weeks, a generational buying opportunity. And we said this 2 weeks ago, and last week, our prediction was confirmed. Let me explain to you. At last week's Morningstar Investment Conference, several fund managers said that they do not expect a severe slowdown. Listen to this carefully. And they are starting to hunt for bargains in the hard-hit tech sector and among industrial companies. See what they're saying. This is 2 weeks, this is 1 week after we said this is a generational buying opportunity. We send this newsletter free of charge to our clients and potential clients. I'll just tell you how to subscribe to this free newsletter. Now, Kate Moore, head of thematic strategy for BlackRock, last week at the conference said that corporate balance sheets, listen to this, corporate balance sheets and behavior so far do not suggest a significant decline in economic activity. For those who are panicking, please listen to what the experts are saying. Okay, I don't read myself as an expert. I have an algorithm, yes. I'm telling you what the big boys are saying, BlackRock. She sees pockets of opportunity in technology, especially software. She favors companies whose valuations are down as much as 40% from the peak, but are generating, this is the catch, plenty of free cash flow. We said this last November, like I said, buy quality companies, buy companies that are generating strong cash flows and low to no debt. Okay. And we also did say that when the market does a correction, even a great company like Microsoft will drop. But that doesn't mean Microsoft will drop and become bankrupt or useless or worthless. Please, let's be mature about this. You are buying a top-class company called Microsoft. So if you can wait 6 to 12 months, let it drop. You are buying Microsoft. You are buying $1 trillion company. What is the fear? Okay, this is what the experts say. Secondly, listen to this. T. Rowe Price Capital Appreciation Manager David Giroux is already finding opportunities in other pockets of technology that have also been beaten up, but have more attractive fundamentals and strong cash flows. What is this telling you? The experts are buying companies with strong cash flows. And if you have the money, you should buy as well. And if you've already bought a strong cash flow company, hang on tight. Don't panic. And if you're worried about day-to-day volatility, buy the US dollar. Your paper loss will be controlled. So
you're saying that so you're saying that because it's such a great buying opportunity, the prices have gone down so low,
yes,
which we should all get in if we haven't already.
Yes. Okay, I'm giving you a free tip. Like I said, Microsoft is close to 30% undervalued.
Yeah.
If Microsoft drops $10 from here, from current prices, one day you will definitely say, I should have bought Microsoft. I can assure you of that. I'm not going to use the word guarantee. I can assure you of that.
Great.
If Microsoft drops 10 US dollar from current levels, my God, amazing. It's amazing.
Sometimes I think it's uncanny that you keep saying the same things and it applies on different scenarios. So if only we would listen, we would be really okay.
Because human nature, Tessie, when markets drop 200 points to 400 points, everybody panics, all logic is thrown out of the window and the baby is thrown out of the bathwater.
Yeah.
You can tell, we had so many instances of our clients when the market drops 400, 500 points, because they forget at the end of the day. I always ask them one question when they panic. What are you buying?
Yeah. And some of us who don't understand will ask, and I've heard some of my friends asking, like, why aren't we making as much profit as we used to?
Well, in these times, it's better to make less profit than to lose money, isn't it?
Or even no losses.
Yes. A point to note, T. Rowe Price Giroux says that even if there is a recession, the risk is already reflected in select semiconductor stocks, industrial conglomerates, and financials, given their declines of 30% or more from their highs. See what he says. Yes. Financials, semiconductors, and tech stocks. It is already, the bad news is already priced in.
Right.
Okay. And only time will tell. And then they will say, I should have, I could have. Now, point to note, this is a very important point. BlackRock says at the conference, right? Not enough attention is being paid to subsectors of tech, like the cloud ecosystem, cloud computing software companies, and also consulting and others which enable cloud computing, as well as cybersecurity software. Jesse, cybersecurity is a huge play. But the thing is, cybersecurity stocks are expensive. And even if you use a CFD, you still pay about 50 to 60 US dollar per share using a CFD, which is 10% or 20% of the actual value of the share. Cybersecurity, the margin requirement is higher than, as good as top quality stocks, higher than top quality stocks. But it is a very big sector that will climb higher. Another free tip for you. Cybersecurity will climb higher. Okay, it's going to be huge. So you can see from this video, the purpose of this video is to first allay everyone's fears. Secondly, is to show you that we're not talking nonsense. Even the big boys are saying the same thing.
And listen, Ashwin, it's all about timing. So if you enter the market at this rate where stocks are so much lower, you tend to expect a higher upside when markets bounce back.
Yes.
So any new client you have right now that chooses to come in now has a higher potential upside than those who came.
We are doing a major marketing drive now to tell clients, that new clients, that this is the perfect time to go into the market. Because the additional downside from here, say 10%, for example. I'm just throwing a ballpark figure here.
Yeah.
So you buy a stock, it drops 10%. Big deal.
Yeah.
You see, when you look at the big picture and you look at the 5-year chart, you understand that there is a very big world out there. It's not just today market dropped 300 points, tomorrow dropped 200 points, I'm shivering in my pants.
Well, I suppose it's the mindset.
We don't trade like amateurs. We don't trade like amateurs.
No, I suppose it's the mindset of being a scalper versus a position taker and an investor. So that's the distinction.
Well, let me now define this. Position takers take positions for 6 to 12 months, 3 months, 6 months, whatever. We are not scalpers, but we have a new feature to our trading called high frequency trading. Recently, our high frequency trading has come to a standstill because the market has been dropping in one-way street every day. But having said that, there are still pockets of growth in medium-term high frequency strategies that last from 1 month to 3 months. So if you wait 1 month to 3 months, you can do what we call a high frequency and mega trend hybrid strategy, where the stock is actually a high frequency stock, but it's got a mega trend behind it. Okay. And I'll give you one small clue. I'll give one small clue. The energy sector is offering a lot of opportunities for high frequency and mega trend hybrid strategy. I will not give any names because you have to sign up if you want to know the action.
I would encourage people who are interested to contact you directly to discuss all these possibilities and potentials.
In our next video, a couple of videos from now, we will be talking about what is high frequency mega trend hybrid strategy. This is something new. This is something new that we have been doing. You see, high frequency in a pure form means you go inside, you make $1,000 and you come out. But in a market like this, where everything is dropping, that is not possible. But the high frequency plus mega trend hybrid strategy is possible. That means you wait a bit longer, 1 month to 3 months, and you will see the stock jump. See,
interesting.
We have done this. We have put our investing strategy of algorithm and high frequency into a science. There's
so many pockets of possibilities.
Yes,
it's very intriguing.
At the end of the day, one thing the investor must come clean and honestly tell us: how long can you wait, and how much paper risk can you afford? We have to know this, and you can't lie to us. You have to be true to
Everyone
yourself.
Will say, I have a very short fear index. I don't want to wait.
Like I said, I remind you, even a best company like Microsoft can come down 20, 30, 40 US dollars a share. But you see, if you look at it from another point of view, you have money, you buy more.
Yeah.
Today, buying Microsoft is a better strategy than going to a casino.
Right.
Right? Why would you go to a casino and throw 20, 30, 40, $100,000 when you can buy Microsoft for $100,000 of stocks of Microsoft stock? And
you obviously don't know the thrill of the chase.
1 year later, when you put $1 million in Microsoft and you make 30%, isn't that thrill?
Yeah.
What's that thrill? What's that thrill?
Well, thank you, Ashwin, for today. Very enlightening, especially for me. I feel much comforted. And always the possibility to jump in when, shares are at their lowest.
Like, let me give you a clue here. The market's been coming down for the past 3 months, like you said. You know who has been buying the most stocks? It never fails. In the first quarter, Warren Buffett has bought 51 billion US dollars of stocks. You think it's crazy? You think it's crazy?
He obviously knows what he's doing.
Yes. If you want to know the report, the details of what he's buying and what we are buying on the back of that, please subscribe to our service.
I think it's very advisable for anyone interested to have a private chat with you. How do we contact you, Ashwin?
You can contact me at ashwin@ppchk.net. And on WhatsApp, it's bit.ly/algotrader. And we have a YouTube channel, bit.ly/algowealth.
Because it's good to customize each portfolio according to your client's needs.
That's what we do. That's what we do. But of course, we say the minimum is 50,000. That's a basic kind of trading strategy. But if you want to do high frequency and hedging, the ideal sweet spot amount is 200,000 US. Where you can,
and you're talking only retail because your private clients,
3 million and above.
You ask of 3 million and above, right?
Yeah. So
for big time trading.
For retail, for 200,000, you can do hedging, you can do high frequency trading, and you can do stock trading. And you have enough room to move about when the market becomes volatile. That's why we say 200,000. It's not because we want to ask for more money for ourselves. We don't benefit. I mean, you benefit. When you put 200,000, you get to do more things. The client benefits.
Yeah. Thank you for today, Ashwin. We'll talk soon.
Thank you. Thank you.